Oh, hello. Thank you for tuning in to Un Poco Moss, the show where we give you just a little bit more. My name is Danny Deals. Sorry I haven't been with you turds in a little bit. Been very, very busy with tax time and some real estate shenanigans, but happy to be with you today. It is October 4th, 2023, a little Toper time check, a little Topolinski special coming at you at 8:16 a.m. out here in beautiful sunny Los Angeles. The sun is breaking through the marine layer here. I'm overlooking the beautiful Pacific Ocean, and I just couldn't be more thrilled to be coming at you on a Wednesday. Guys, we are talking SoFi, ticker symbol SOFI. Guys, the stock trading down again. Wooden nickel, 5 cents, 0.7% at $7.23. Volume was pretty high yesterday. Volume has gone back a bit more moderate today. Almost 11 million shares traded on the day. This looks like more of a conventional SoFi day. NASDAQ is actually up. The other indexes are flat. SoFi is sort of doing that mountain and hump deal where they bought a little bit right at open, sold off hard,
You need to
all the
stay
way
ahead and
down to sorry guys, these stupid ads play. Um, the stock then sold off as it's wont to do all the way down to $7.14, popped up to 7.27 and has just been kind of doing this seesaw deal all day. A little bit of news on the stock actually. SoFi just scheduled the conference call Monday, October 30th, pre-market. So that's coming up in less than a month. That's 4 weeks from 2 days ago. So we are ready to rock, guys. Obviously, the quarter is over. Management knows the numbers. Management has done nothing but guided upwards. If anything, we know that they like to sandbag their numbers. I'm expecting, a 5 cent loss, but I'm expecting very, very strong deposit growth, which is sort of the metric I'm latching on to as most important for the SoFi stock right now because you can talk about AI and you can talk about, Galileo and you can talk about Wyndham and you can talk about all these sort of ancillary things, but if you look at the numbers, the way SoFi makes money is through loans. Like that's what they do. Like all this other stuff, technology and it, and they don't have some special AI model to, to hawk these loans. They just go by like high credit scores and good income. It's a lot more conventional in that sense than a lot of us would like to let on. People, they're always asking Noto, like, well, what are you doing with machine learning? And he's like, well, we have some very smart people. We have computers, we have, multiple Apple 2GSs laying around. We have a Tandy. It's like, this is not rocket science, guys. They got the bank charter. It's freaking genius to buy that little bank. And then, now they can get these deposits. They don't have any branches. They don't have any of the costs. So if you want to value it as a bank and just look at the growth of those deposits, the growth of the bank, how they're able to grow the balance sheet, how do they make money? They make money by loans, by lending money, by generating mainly personal loans right now. And hopefully they'll start making some money again, generating student loans. And hopefully, if interest rates ever come down sometime in the next few decades, they'll start to make money again on home loans. And, they used to originate a few home loans, but hopefully with the Wyndham purchase, it'll put some Wyndham in their sales. Oh, that was funny. Anyway, guys, let's take a look at these options. There was also news, guys, of the deal with this Tiger Woods, Rory McIlroy. It's sort of this. It's like esports meets golf, kind of what they do with video games. So it's kind of exciting. It's called Tomorrow Sports. They announced a long-term partnership, presenting sponsor, naming, venue rights. And initially, this is going to be in Palm Beach Gardens, Florida, at some junior college. It's kind of weird, but I could see they already are building the stadium again. Tanner at Future Investing had a really good video out on this. The first half of like a 50-minute video, he went, why he likes it, why he likes the stadium. I'm of the same mind. I really think SoFi Stadium was a genius deal. Like SoFi is now a household name with anyone who knows football, anyone who watched the Super Bowl, anyone who is in the greater Los Angeles area, which is like 30 million people. Um, Everyone knows SoFi. And the stadium has a lot to do with that. And even if they're not a customer, even they do come and they see, oh, you get, whatever it is, 30 last year when I was at the stadium was 30% off, I think, on anything in the stadium if you use your SoFi credit card. And just besides that, the millions and millions of people who get exposure on TV, think about the young golf customer who'd be interested in this. Essentially, it's like this giant golf simulator, and there's teams of pros who play, and people come watch. And I'm sure there's going to be like, betting on it. They'll probably partner with one of the, sports books or whatever it's going to be. But SoFi is going to be all over it. And I don't think it's a huge deal in terms of like, it's not like the stadium. Obviously, this stadium is supposed to hold like 2,000 people versus SoFi Stadium, which is like a multi-billion-dollar project. But I still think it's exciting. I think SoFi is thinking big. I think they're very sports oriented. I think they understand that people who go to football games, people who go to golf events, these are people with disposable income. These are people you want as customers. These are going to be people with good credit scores, with money to spend, and with their futures in mind. And I think that's what we're looking for. Guys, just taking a quick look at the chart. I know I've harped on this a bit before, but um, I just want you to see what the algo is actually doing. Don't listen to what they say. Look at what they actually do. So I think I heard one of the guys online. I was watching his SoFi video last night. And he was talking about a head and shoulders pattern here. I'm like, man, if you're talking about like a 3 month, 3.5 month expanse of trading, and you're gonna base the head on like one day of a pump and dump, it's very tenuous. I mean, a lot of people are saying that. That's not what I'm seeing on the chart. What I'm seeing on the chart, basically going back to the first of the year, guys. Okay, go back to January 1st. What happens? Okay, exactly 30 days. This period here in this like pink dotted line, the stock basically is like nothing but green for 30 days. Okay, it goes from, I don't know what this is, $4.50 all the way up to $7.70 in 30 days. So that's just a massive increase. Then for the next 3.5 months, the stock sells off sideways and down. And that is punctuated by this very distinctive pattern that I've circled here in blue. And that's the Chiaverini pet, the Chia pet dump, the Chia pet short attack, right here, May 1st. But then look at this gap down, and then look at this pattern that looks like sort of a backwards N, with the stroke in the middle being the green line. Now, what do we see here? The gap down, the stroke in the middle with this was four green candles, almost the exact same distance up, and then you have a retest of the lows just a bit lower than this low. What do you have here? A retest of the low just a bit lower than this low. Then what do you have after this almost exactly 3.5 month sell off, punctuated by this reverse N pattern, for lack of a better term? I know there's some word for this. I can't remember what it is offhand. I don't read those technical analysis charts, but I know patterns when I see them, guys. This is kind of what I do. This is why I'm able to buy low and sell high very, very consistently. But guys, then look at the next 30 days. Same exact thing that happens here. You start on 515. For the next 30 days, almost exactly until 614, the stock goes up from like $4.70, and it kind of tops out here at 950. It really went up to like 1030 once, but it really kind of tops out here at 955. So the stock goes up 100% in 30 days. What does it do over the next 3.5 months, guys? Exactly the same thing coming back in. Just confusion with this pump and dump. They make extra money. It's not that complicated, guys. They're sucking retail in here, and they're getting retail to dump here and here and here. They're sucking retail in here, the bull trap here on the pump and dump here, and they're just getting capitulation. What is this N pattern about? Why do they hit you once here and double tap you here? Why do they shoot you in the head again? Why do they kick you in the nuts twice? Because people who bought up here in this run up in, around 859, people are buying here. Look at these big green candles. These are where these retail bulls are coming in. And it's so easy to manipulate, you turds, because the stock only has 35% or so institutional ownership and what, another 7, 8%, 7% insider. So like 60, probably almost 60% of the stock is owned by retail returders. And returders are emotional sheep that they can just ring out over and over and over again. But what do you notice, guys? In this 30 days, the stock goes from 450 all the way up to 750. And then as it trades sideways and down for 3.5 months, it comes full circle just about back to where it was, all the way back down into the fours. But this time it runs all the way up to 10, and you see this end pattern. It doesn't, it basically does the same thing. If the run stops at 955, this comes down $2.50 to almost 7. Okay. If this run stops at 750, which is where it really stops, besides that one, sort of abnormal candle, if you stop about 750, it comes down almost all the way to $4. But whatever that is, guys, it's roughly 5. So it's, if you stop it here, about 5, but 2.5, $2.75 sell off. It's already sold off $2.50 here. It's already been the requisite 3.5 months. And this happens to line up exactly with earnings, guys. The stock tends to pump a bit that 30 days before earnings. So we've seen this double bottom here that we saw exactly here. It's the exact same pattern. It gaps down on both of these red legs, and then we're looking to recover off the bottom. But we just have to wait and see if that's what's going to happen. The options are suggesting to me that it is. There's basically nothing out here. This options market is dead this week. How often do you see SoFi with only, with the primary three dates, the primary three strikes, 758 and 850, 6,000 calls total. It's almost nothing. There's usually 8 to 10,000 calls just on one strike. And with puts, guys, it's even less. I mean, the options activity this week is just dead. It's ripe for the stock to go up here late in the week, in my opinion, if we found a bottom. Now, could the freaking bottom drop out of everything and, the soft landing turn into a kick in the nuts? Absolutely. It's happened many times. But this is basically what I'm seeing here, guys. If history repeats itself, we're going to see 30 days of basically accumulation, buying, covering into the earnings report, which makes a certain amount of sense to me. We were 650 coming into the Q1 report. We were 950 coming into the Q2 report. I would like to think we're going to be, at least up over $8 coming into the Q3, because I expect, rapid deposit growth, pretty good membership growth. There's a couple of things I would do if I was the SoFi stock. This goes into the partnership with Tiger Woods and Rory McIlroy's Tomorrow Golf, naming sponsor, title sponsor. It's a partnership with the PGA Tour and his Tomorrow Sports First project, TGL. This is the sort of virtual league. And tennis greats Serena Williams, Venus Williams, part owners of Los Angeles Golf Club, Alex Morgan, basketballs, I can never say this guy's name right, I'll just say Giannis, are also investors. New York is owned by Stephen Cohen of the New York Mets, one of the big crooked hedge fund turds out there, hedge turders. But anyway, guys, that's neither here nor there. But I think this is going to be really good for SoFi. This is going to get the name SoFi out to a very young, affluent, happening crowd. That's the customer we want. That's the customer we're trying to attract. A lot of people are talking about this student debt cancellation that Biden is rolling out again. They canceled another 100 to 127 billion in student. Remember, the guys, there's 1.5 trillion in student debt, so that is fairly significant, but it is kind of what you'd expect. Forgiveness plan canceled. That one was canceled, but it's approved. 5.2 billion debt relief for 53,000 borrowers under the Public Service Loan Forgiveness Program. for students who work in certain public service jobs like teaching, and those people are not going to have anywhere near the income to be a SoFi customer. 2.8 billion for almost 51,000 borrowers in income-driven repayment programs who have been in repayment for 20 years. These again, these are not going to be the people have been repaying for 20 years. That's probably not going to be your SoFi customer, and a billion for people who have total and permanent disability. So I don't see this at all hitting SoFi. Now, the headline is going to hit SoFi, the shorts, the turds, the bears, they're going to hit SoFi. But again, going back to why is SoFi so easy to manipulate? Why are they able to generate these pump and dumps over and over and over again and able to wring more money out of retail? Guys, if they're able to get you to buy right here in this green candle at like between 9 and 950 and then you sell down here at 728, I mean, the market makers just made a massive like 20% of your money in a couple of months, and you just got, basically nothing. You got a bologna sandwich, you got a Chia Pet surprise. It's like, dude, I don't know why you would do that on no news. Nothing happened. Nothing went wrong with the stock. Like these types of moves that you see with the stock, like going up to 650 and then down to like 540 in one day and then gapping back down to 4. These are the types of move you see when a stock is like on in danger. Somebody thinks they're going bankrupt, or the CEO, they're like, oh, a pretty good earnings report. Oh, the CEO has a dead hooker in the trunk. Like this is the type of move you'd expect to see, not just for no reason, not on a stock of this market cap. And that's why I say the market makers have used this stock to wring money out of retail investors for years now, and they're just going to continue to do it as long as they can. They obviously want as many bites at the apple as they can get, and why wouldn't they? If you have, sheep, if you have sheep readily available, and those sheep have money, you're gonna shear them. Sorry guys, just getting a text from the extremely important CEO of my organization, Princess J, and she takes priority. So we got to get the hell out of here this weekend, guys. We got to do something fun. We've both been working way, way, way too hard, and that's one reason I just haven't seen you turds in a minute. I'll be right back. Sorry about that, guys. I'm back, and I had to take a call there. It's 8:53 a.m. at this point. SoFi is basically flat on the day, pushed up a bit here now, even on the day, $7.28. The live short interest, just giving you a quick look. The borrowed change is up again, 242,000. So 242,000 net shares borrowed, and that is versus a churn of only 12 million shares. So, yeah, I don't know what that is, guys. Like 2% of the churn is borrowing, which is not that high for SoFi, but we are pushing into the green. The NASDAQ is now plus 124 or 1%. The Dow and S&P are both barely green. Russell is barely red. Um, Crude oil is down big time. Gold is flat. I never say those, but I just read them across the page because I was a little bit distracted. Um, so I kind of forgot what I was talking about. But basically, guys, with the student loans, yes, the cancellation is another, bad headline for SoFi, but I don't really think it has any effect because these aren't the borrowers that are going to be refining with SoFi anyway. They keep saying that the short hasn't really gone up, but then why is cost to borrow max up at 6%? Um, the short interest of free float is 12.2, free float on loan 10%, shares on loan 85 million, days to cover 2.5, utilization is holding fairly steady at 27%, though down a bit over the last week. If you go to an overview, the volume had spiked a couple of days there, guys. It was 28 million, and then 28 million again, and then I think it's going to come back down. And I think, like I said, I think the stock should push up. October is always an extremely volatile month, but if the chart holds true, if history holds true, I don't think they're going to keep this thing down below $8 heading into the earnings call. I don't think the shorts have that kind of balls. Um, because if there is a surprise, Noto, you think Noto is so predictable. He's so fucking predictable. Can he just pull a rabbit out of his hat just once? Anthony Houdini Noto. give us an escape. Like, I don't want to get out of the SoFi stock. I just want to burn these shorts who keep digging in on the stock over and over and over again. But guys, the fact remains the growth story is intact. The members keep growing, the deposits keep growing, the products keep growing. SoFi keeps growing their product offering. Basically, guys, I don't think SoFi savers are likely to chase bond yields. I don't think people who have their money in SoFi savings accounts at 4.5 or whatever it is, I don't think they're going to run off and switch to bonds because bonds are making 5. I don't think most of the younger people are invested in bonds. Yeah, like JP Morgan, those yields are an issue, but I don't think the SoFi customer is really looking to get into like muni bonds or treasury bonds or, I just don't think they're bond buyers, and I don't think it's going to have that much of an effect in terms of deposit flight or anything in terms of SoFi. But the central question is, guys, for SoFi, and as I was talking about early in this video, SoFi is basically making money lending out money in personal loans. That's what the vast majority of their loan book is. That's whether they're selling some of those off this last quarter or whether they're holding even more of them on the books. The fact is, deposits are growing so quickly that SoFi is able to make more and more and more loans and still keep very, very healthy, very conservative reserve requirements. They're able to be extremely selective on who they lend to. And they're able to keep their defaults low so far. But that's the central question, guys. Do the loans go bad? Do the loans go bad? Um, if they don't, we're, on a gravy train with biscuit wheels, guys. Um, if these loans hold, and I think they will. Who is the SoFi borrower? They won't default unless absolutely necessary, unless they have no choice. People are like, well, it's a personal loan. It's just like a credit card. They're just going to stop paying. Why would they? They're not going to stop paying their mortgage. First off, these people are savvy. These are people with graduate degrees. They don't have adjustable rate mortgages, guys. These guys locked in a fixed rate. Secondly, they're not going to charge off a personal loan, a large personal loan. That destroys your credit for years, guys. A huge charge off. If you just charge off a personal loan and don't pay it, you're not going to get favorable credit terms for a long time. So these are people with good jobs. These are people who lease new cars all the time. These are people who go on vacation. These are people who are getting points. These are people who are investing. These are people with assets that if they get in trouble, they can, pull from other assets. They can do other things. They can take on extra work. They can slow down payments elsewhere. They can refi their student loans. That they're not just going to default on their loan and just take this massive charge off and destroy their credit. People with 760 credit don't want a 550 credit score, overnight. It really hampers your lifestyle. It hampers your ability. That credit is your lifeblood, guys. Whether you're a company or a well-off individual, upper middle class, a mover, a shaker, a so-and-so, somebody with fancy shoes, you need your credit. And that's why I don't think these loans are just going to start to default willy-nilly. Now, of course, if high interest rates are sustained for years and years and years, there will be some SoFi borrowers that will default in higher numbers than they are right now. There's no question about that. It's not as if just because SoFi is selective and they have well-qualified borrowers, they're somehow immune to the conditions in the overall economy. But I think they have done as good a job as you possibly can insulating yourself from these dangers. And SoFi, again, back up. I was hoping 740 was going to hold, but they just keep hitting the stock, guys. They keep shorting the stock, borrowing against the stock, anything they can to push it down. But I think the chart, again, not proves, I mean, that's asinine, but I think the chart shows that we are going to go up for the next 30 days. October has historically been extremely volatile, but we see these patterns. This is repeated a couple of times. They shook everyone they could shake out for the last, I mean, they've been hammering bulls in the nuts for the last year and a half, guys. If they haven't shaken people out, I mean, we're still at this level. I mean, we're still back under these levels that we've been hitting. It's basically the lows. We're back in this low channel. I don't make that call yet because it's been so much borrowing activity. that's put us here. It hasn't really been a lot of organic selling. I don't think um, any retail investors are really dumping at these levels. I can't see it, but obviously somebody's sold, but this is not normal selling activity. Again, the algo is in control of the stock. We're not in control of the stock. But it's 3.5 month run of basically shaking out retail, pumping and dumping, buying and selling, punctuated by this reverse end pattern, making two lower lows. These lows are even lower than anything at the beginning. It's the exact same thing that happened here. You had a big push down in the middle, exact same thing you saw here. And until then, it was basically sideways. We just didn't have this giant pump and dump on this one, but this first peak was much more dramatic, I would say, in terms of this gap up and run up. We just had run up and run up here, but not this dramatic gap up on earnings, which was Q4 2022 earnings. But anyway, guys, this 30 days of rapid buying and accumulation, followed by 3.5 months of sideways and down, selling, wringing out retail. We have to see, does that repeat itself over the next 30 days, or do they push the stock back down under $7? Time will tell. Options are telling me the stock is going to go back up. I think the market is actually going to go back up. The economy is still strong. There's nothing in tech earnings to support these declines. I think the valuations, the multiples are gaining much more sanity. I think there's a lot of low hanging fruit you could be investing in, and I don't think any of that is lower right now than the SoFi stock. It's trading almost 30% under the SPAC offering price with extraordinary growth. Just the banking business alone, guys, is going to be making a fortune in the next, later half just of this decade. It's not going to take forever. I mean, the way this thing's spinning up, the deposit growth, the loan growth, the quality of the customer, all of the products we're going to be selling, all these turds. I mean, it's going to be great, guys. We're going to be making cash hand over fist, and the bears and the turds are going to be off hibernating, dreaming of better days when they were absolutely cleaning our clocks back in 2022 and early 2023. Lo, those dark days. But guys, there is a light at the end of the tunnel. We're going to hope it's not a train. We're going to hope it's not the Chia Pet Express coming to run us over and flatten us cartoon style while we get up and walk like an accordion. We'll have those accordion legs. You know that when you get run over by a train in a cartoon. It's all good. You just have accordion legs for about 10 seconds. They play a bagpipe or a accordion, and then you're fine in the next scene. So it's not a big deal. But Wile E. Coyote, that bastard, always falls off that cliff. Let's hope the SoFi stock does not fall in. We've already basically fallen off a cliff, guys. I mean, we're pushing that $10 level 3 times. I totally discount the pump and dump. I don't think it's really a part of a head and shoulders pattern. I think it's just market mechanic bullshit. But guys, we're pushing 10. Now we're pushing back down towards 7. Up here, we're pushing 750, push back down toward 450. I mean, it's still that $3 drop. We just pushed up a lot higher this time, and I think those lows are basically coming in higher. These were the lowest lows back in May. These are the lowest lows back in September, and hopefully we go up from here, though lately I've been wrong more than I've been right, so take anything I say with a big, huge block of Himalayan sea salt. It's good for you, turds. Guys, it's the SoFi stock, ticker symbol's SOFI. It's October 4, 2023, Topper time check, 9:05 a.m. out here in a beautiful sunny Los Angeles. SoFi stock is up 3 cents to $7.31 on the day. Volume is moderate at 13.3 million shares. Thank you for watching. Un poco mas. Sorry, this video is a little bit all over the place. Just been very, very busy lately, but wanted to check in with the Turd Army. Hope you guys are all doing very, very well. Hope you're having a good Wednesday. I will talk at you again as soon as possible. Thanks for watching Un Poco Mas. My name's Danny Eels for Hurricane Lopez and Stock Karen. You turds have a wonderful day, and we'll turd at you later. Turds.